Hello everyone, hello. I just want to do a quick tutorial on stop loss, on how to place your stop loss, and want to just share a little bit of that with you all in the group so that you can, properly place it. Uh, Stop loss, I don't do a lot of talking about stop loss because it really is an individual determination because you have to determine what your risk tolerance is. You have to determine what you are willing to lose. And it's just not something that I can tell you. You have to make that determination. So what I can do is give you some ideas as to how you can gauge it. And then, of course, you can uh, make the determination based on your tolerance. Now, one thing I would say before we begin is that anytime that you enter into a trade, you automatically want to enter in with the understanding that that money is lost. You want to consider that money lost. And I think that that's how a lot of traders get in trouble mentally and emotionally because, of course, we are in this whole deal to profit and we expect to profit and we look forward to profiting and all of those great things. I get it, but there has to be an overarching understanding that you will likely lose your money. The potential of losing your money is prevalent, is real, right? Because at the end of the day, no matter what your analysis is, no matter how much studying you've done, no matter what your confirmations are and the consistency of your confirmations, price is king. And if at any point price can do a flip on you, it can do a spike on you and take you completely out. And there's nothing you or anyone else can do about that. The only thing that you can do is execute a proper analysis. So you got to understand some things and institute your confirmations and follow your confirmations. That's all you can do. After you've done that and price didn't pan out for you, you should feel good that you did everything you were supposed to do, which is the only thing you are in control of. So I want you to kind of marinate on that because that understanding will help to manage your expectations, help to manage your emotions as well. Now, how do you protect your money? Well, one is with a stop loss. The stop loss is in place to help protect your account from being completely wiped out. Now, if you hit your stop loss, you will suffer a small loss or a loss because the amount is going to be dependent on your risk tolerance, but you will suffer a loss, a percentage of a loss compared to the whole account being lost. And so you want to exercise that. And know you probably know people who don't use a stop loss and they seem to be very successful. I don't use a stop loss. I'm going to be perfectly honest. It's not because I'm an expert or anything like that. It's just I'm confident with my analysis. But more importantly, I, I have accepted the risk. So again, it depends on your risk tolerance. I've accepted the risk. I've calculated the risk. I already know what my my loss calculation will be. So you got to just make that determination for yourself. Now, please, I'm encouraging everybody in this Telegram group to use a stop loss. I'm encouraging you all to use a stop loss until you start to build that confidence in your analysis and you've accepted the risk. Because at the end of the day, it's your account, it's your money. You can do what you want with it. It's my money, so I control what I'm willing to lose and what I'm willing not to lose. If I'm willing to put a stop loss, if I'm not. If I'm willing to put a high stop loss, it's your money to do with what you want. Just understand the consequences of the decisions that you make. Okay? So now, of course, you all know that my primary trading platform is the Triple Arrow system. That's what I train on. That's what I trade on as well. And so I am going to go over the stop loss options utilizing the Triple Arrow system. And then I will offer some suggestions for those that do not have the system as of yet. Now with the triple arrow system, it's easier to determine your stop loss. If you are working with a small account, it's safe. I don't want to say it's safe. Well, no, I don't want to say it's safe, because a 1-to-1 ratio is ideal. That's what I want to say. It's ideal if you are if you have a small account that you're building, right? And of course, your lot size has to be 10 cents. You want to be working with your micros. And so it's ideal to have a 1-to-1 ratio, right? A 1-to-1 ratio simply means that I'm willing to lose $20 in order to gain $20. So it's 1-to-1, right? Starting off with a 10-cent lot, you want to look at that. But here's my opinion on that. With a small account, utilizing the triple arrow system, my suggestion would be that you use the arrows that's built in, or the support and resistance that's built in as a stop loss. And here's the reason why I think that this is the safer way to go, even though it's not 1-to-1. It will not be 1-to-1, because the drawback with the 1-to-1 on a small account is it will take literally minimal movement of price to knock you out the game. If you are going for 20 pips and you're willing to lose 20 pips, price, like I always say, will sneeze and give you 20 pips. It'll also sneeze and go 20 pips in reverse. So you will find yourself really in and out of the market within, the next candle, whatever time frame you're trading on. So it doesn't take much movement in order to hit that stop loss. And it's for that reason why I suggest that you be willing to lose more than what you're gaining, so that you can give price a distance in between your entry and your stop loss. You have a distance where price can move within. But if that distance is relatively close, which a 1-to-1 would give you, then you're likely to get hit on your stop loss. So I hope that makes sense. So let me show you a little on the charts. Now, let's say you are here, okay? You want to get in the market right here, okay? And let's see here. So that is price. And keep in mind, everything is associated with a price. So you always want to be looking to your right, where your price bar is on your chart. So this area right here where my crosshair is in accordance with price 1.55089. That's your entry. So you just got into the market, right? Bam, you're in the market. That's your entry price. Now, your stop loss, if you're buying, your stop loss is going to be going in the opposite direction, right? It's going to be going down. If you're selling, then your stop loss will be going up. Remember that. It's the opposite direction. And I know that you all know that. Okay, so what you would do with the triple arrow system, instead of a 1-to-1 ratio, you would look left and you would look for the previous support. For your stop loss. See, the triple arrow system is intricately designed to react to price. It captures the history of price, what price has done in the past, support and resistance, where were those key areas, what areas did price stall, what areas were rejection. It's already built in. So it's safer, in my opinion, to utilize the triple arrow system, the support resistance, or the arrows, to determine your stop loss as well as your take profit, because it's already identified areas of resistance. It's already identified. So with that being said, if you would have gotten in at this area right here, right, and you would have put your stop loss right at this previous support. Let's measure the amount of pips that is from this entry point. That's 90 pips. 90 pips. Now, I'm sure you're probably saying, that's a lot of pips. I only have a $50 account. I only have a $100 account. I can't afford to risk 90 pips. So let's put some things in perspective, because all of this matters when you are managing risk. Your lot size at $50 or $100 should be 0.01. It should be 10 cents. So let's say you're following the rules and it's 10 cents. So we take the 90 pips. This is how you determine your dollar amount loss, potential loss. You got 90 pips, right? Times 10 cents. So you are risking $9. If you have a $50 account, that's not bad, right? That's not bad. If you have a $100 account, you can live with a $9 loss. You're not going to have heart palpitations because you lost $9. However, if you over leveraged your account and you took the same 90 pips, but instead of the 10 cent that you should be trading on, you're going to trade 40 cents, right? So now that's $36 on a $50 account, and that hurts your account. Even on a $100 account, that hurts your account. So as you can see, the lot size is a very pivotal area that you have to manage in order to profit and not lose. Okay, so as you can see, now I want to show you this. So we have gone, we have taken our stop losses right here on these green dots. That's our stop loss, right? That's our stop loss. Okay. Now, look over to the right. You got in over here. You got in over there. And we are right here. Okay. Now, this wick may have got you. This may have gotten you out of here. All it takes is a tap on the wick. But then it could come a fraction of a hair and go right back up and don't get you. So this is a call. This may have gotten you. You would have been real close and got stopped out right here, and you would have lost $9. Or if you played it close, and I think you would have got stopped here, because it just depends. If you would have put your stop loss on top of the dots, you definitely would have got stopped out. If you would have put your stop loss under the dots, it looks like it's a fraction of a hair off. But let's just say you lost that one because it's too close. Let's just say you lost that one. It happens. It happens. You got to be okay with it. And when you're not over leveraging, you will be okay with it because it's a small amount. And here's the other thing. Here is the other thing. And I hope that this releases some of you when you're trading and when you're dealing with loss. If you get stopped out, there's always, always, always an opportunity for re-entry. There's always an opportunity for re-entry. So you may have taken a $9 loss when that candle, hit your stop loss. But guess what? When price goes back up over the 50 and all our confirmations are still intact, get back in the trade and take it up. So you not only would have lost the 9, but you would have been able to gain that back and some. So just understand how to recover in the market too. There's a lot of little intricate details that you want to put together and operate simultaneously. So a loss is just another opportunity for a better entry, And that's another video, and I'll do that at some other time. But this would be my suggestion for a stop loss. Look left from wherever your entry is. Look left for the previous. If you are buying, you're looking for the previous support. If you're selling, you're looking for the previous resistance. and use that as your gauge for your stop loss. Now, one thing that I don't like to play my take profit in too close. I like to give it a little room because of the wicks. You know, all it takes is one little tap of the wick and it can knock you out or it can put you in profit. Either way it goes. So I like to give the market room to breathe and to do what it's going to do. So that's my suggestion as to how you manage a stop loss. Now, if you do not have the system, then you would need to be able to identify the previous support and resistance. And it's real simple, guys. It's real simple. If you're buying, you're looking for the previous support. If you're selling, you're looking for the previous resistance. And support and resistance is nothing more than an area where price was pretty much ranging in the same area. Same, it hasn't, really made any strong moves up or down. It's pretty consistently in the same area. So this would be considered, when you look left, computer's slow here. As you can see, this area here, that would be my previous support. And the support is the floor. It's the floor. It's the bottom. And the resistance is the ceiling. It's above. Okay? So because I'm looking for my previous support, from this area here, I'm going to look left, and voila. This is if you didn't have the system. This area right here. And you want to take a little box. Let me see if my computer going to do it. Yes, thank you. You want to just outline that if it helps. On your MetaTrader 4, you can go to Shapes, go to Triangle. Go to Triangle. I'm going to go from the bottom. Forgive me about that. 1 second. My computer be stalling because I always have it on. But nevertheless, I don't have time to wait for it. Let me see if it's going to let me do it. Nope, I don't have time. It's temperamental. Okay, bam. Okay, so right at the bottom here is support. Okay, generally same area. Support and resistance. Anytime that you have multiple touches in the same area, you have a bona fide support and resistance. I'll do an in-depth training on that for those who need it. But this is considered right here. This is my support area. So I'm going to look left, and this is where I will put my price at the bottom for my stop loss. Now, again, I would give it room. I wouldn't put it right on the edge. I would, tend to go down a little further. But in this case, you probably would have got stopped out. But it don't typically, with the triple arrow system, it's pretty consistently that you'll be fine. But in this case, because like I said, it happens. It happens. There's nothing you can do about it. So this is where you will put it. So let me give you another example. Okay, so we are buying. We're buying, right? So we're in this area. Let's say we're in this area. Price is above our 50. It closed above the 50. So we're going to go ahead on and get in, right? We're going to get into the market. We're going to take that trade up, okay? Going up 20 pips and whatever that price is associated with that area, that's your take profit. Now, for the stop loss, but if you do not have the triple arrow system, we want to look left and we want to look for the previous support. And that would be right here, okay? And so you can see that price never went back from this point where you got in, price never went back down. So you would have certainly made your 20 pips. And though from this point to that support area is 110 pips. So you're probably like, no way in the world I'm going to do 110 pip stop loss just to gain 20 pips. That's a crazy, ridiculous risk to reward. I agree. But because, again, I mean, this system is just, it's just that accurate. Because of the triple arrow system and its ability to identify those key rejection areas, you are more likely not for price not to go back in that area. Far more likely. Far more likely. Me personally, I would certainly do it because this system is tried, is tested. I back tested it, and I'm comfortable with it if I use this as a stop loss method. So let's take 110 pips, and you're doing 10 cents. You got, so that's $11. So $11, you're gaining, willing to lose $11 to gain 20. Risk to reward, totally not cool. But as far as the probability of you hitting profit over your stop loss, is a very high probability, in the 90 percentile. And that is the reason why I would suggest that over the one-to-one on a small account. Because on a small account, let me just show you that. Okay, so on a small account, let's do this. So let's say you would have gotten in the market right here. Okay, that's your entry. You got in the market, right? Now, we're doing 20 pips. And we're doing a one-to-one, which means you're going to do a 20 pip stop loss. So let's go down from the entry, 20 pips. 20 pips would be roughly right there. Okay, so let's go and put our horizontal right here. That's 20 pips, guys. So, does price have movement room between these two lines? No. In this case, hold on, you got it here. So in this case, you would have been fine, but that's too close for comfort. That's too close for comfort. You're likely to lose more than you gain because there's no room for price to swing before it hits you. So that is the reason why I made that suggestion. Okay. With a small account, just hang with your 10 cent lot and be okay building slowly unless you put more money onto your account so that you can, you know, have a larger lot size and you would be able to do a better risk to reward ratio. But if you're not in a position to do that as of yet, then what I suggest is more ideal is that you look left for the previous support and resistance and use that, because now when you go that route, you've increased your winning probability. Because why? Okay, let me show you why, and then I'm gonna wrap it up. Then I'm going to wrap it up. I hope that you all are seeing the difference and why I make the suggestion I did. So let's say this yellow line is your entry, okay? And where were we? I forgot where we were. Oh, we were down here somewhere. We were over here. Oh, we weren't over there either. But nevertheless, okay, we're right here. Yeah, we were right here. Okay, so this is your entry. This line right here is your entry, 55815, right? And we are right here. So that couldn't be your entry. Bear with me, please. Let's move this down to where you would have gotten in the market. Come on, computer. Okay. All right. Okay, so you got in right here. Okay, so this yellow line, that's your entry. This is where you got in at, right? And so we want to look left. We want to look left for our support because we're buying. That will put you right here. Okay, so this is your stop loss is right here. So the distance between the two lines, you can clearly see you have movement. Price has space to move in and out, in and out. And the probability of price making such a large move from your entry down to here, the probability is less. Not saying it can't happen though, because we've seen some things, but the probability of that happening is far less, giving you a higher probability of winning your trade. Whereas if you had the 1-to-1, you would have been up in here somewhere. Clearly, no room for price to move before it hits you. So that is again the reason why I would recommend utilizing those parameters for your stop loss. So I hope that helped, and I didn't mean for this video to be so long, but I'm done. If you have any questions, just let me know. Bye bye.